Right, in these little videos, I just want to show you the classification of financial assets. So, basically, you need to look at what the business model is for how they deal with that particular financial asset, and particularly, are they just looking to get the contractual cash flows, solely payments of principal and interest, what we call the SPPI test. So, if you think about it, if you go and get a loan, then the cash flows from that loan are the principal and the interest. That's basically what the SPPI test is. Let's have a look at it in a bit more detail then. S&P, the first S&P, solely payments of principal and interest. Basically, is it really a loan? Now, once you've got that in your head, the next thing you need to get in your head is, well, there's only three categories really for financial instruments: amortised cost, fair value through OCI, and fair value through P&L. So you just now need to know which goes into which, starting with amortised cost. And that's used when it is held. The business model is to hold that loan. So let's say it's a receivable loan. You hold it to collect the contractual cash flows, the SPPI. You hold it to collect the principal and the interest only. Then it's an amortised cost item. It's a fair value through OCI item if you hold it for the SPPI again and you hold it to sell. So sometimes you sell it before it's finished, before you've received all the loan, you sell it on to somebody else. So you're keeping it for principal and interest, but occasionally you also sell it. And then the final one, the fair value through P&L, basically that's things that you're held for trading. So you're not holding them for the principal and the interest, you're holding it for trading. So there's the three categories. Let's have a look at it then. Let's have a look at that first line. You hold to collect the SPPI. The SPPI test is passed, so the classification would be, if you're holding it only for that, hopefully you agree, it's amortised cost. If you hold them to collect and sometimes you sell them, it's fair value through OCI. And if it's anything else, held for trading, it's fair value through P&L. Okay? Shares in another company, they're normally fair value through P&L, but they could be fair value through OCI if you designate them to be so.